Craig, I'm looking at analyst recommendations on Tesla. It's an amazing chart because overall it shows that negative, like the sell rating hasn't increased that much in terms of the red barometer there on the graph. But what has plummeted is the price in the yellow line. Look how much the share price has declined in Tesla. And actually, you're looking at the 12-month price target. It's not really keeping pace with that. Are we starting to see, do you anticipate that catching up at some point?
Yeah, I think that spread, as you can see from the chart, suggests that for all the piling on that we've seen the last few days, we maybe still have some more to go, that there are still some folks on the street who are too high with this stock, and that's problematic just given what the Citigroup analyst said this morning, that sentiment is a real problem right now. The big concern that he flagged and that Morgan Stanley flagged, that Evercore has flagged, all these analysts who have stepped up to raise concerns about this name is demand. This is a company that was having real production problems last year. This year, the big story is deliveries and them not being able to sell as many Model 3s as maybe Elon Musk sort of suggested there was demand out there for. And the Model S and Model X are a little bit long in the tooth and very expensive, and that's causing real problems for deliveries and what has everybody sort of freaking out about this company right now.
Jean, yeah, Morgan Stanley saying, look, actually, in a way, they're too early to the party. We haven't seen demand for EV catch up. They're saturating the market. Do you agree with that? Is demand going to eventually play towards Tesla's strength?
Eventually it will, and I think it's important to stress that I am a believer in Tesla. I think that they will, in fact, turn the corner and capture what will be a juicy growth curve around electrification of vehicles. We're at 1 or 2% today globally. Eventually that's going to be 100%. But 2019 is going to be a difficult year. The demand question is quite critical. They're going to miss their numbers, their target. Everyone knows that. But I want to really focus in on what's happened in the last 3 weeks around the story, is that the stock is down 27%. It's down 24% since May 5th, when Trump tweeted twice about 25% tariffs. So there has been an acceleration on the downturn in this stock based on what's happened in the last few weeks. You mentioned analysts have largely not changed their opinion. The reason why the stock has dropped is ultimately, this gets back to the demand, is that the China piece is now more in question. And I think that there is risk. This is different than Apple. I think that there is risk that Teslas are tariffed going into China. And separately, I think that there can be some consumer backlash against the China brand. But China is probably was expected to be about a quarter of the sales for this year. If that number gets down to 12%, then there's going to be a little bit more dramatic miss. And I think it's investors getting comfortable with that China risk that has really thrown the stock into a tailspin more recently.
Has it fallen far enough, therefore, Jean? I'm looking at a news story just being posted by Dana Hull with analyst Adam Jonas, once again from Morgan Stanley, being quoted saying, overall, Tesla is no longer seen as a growth story. It's seen more as a distressed credit and restructuring story.
In the near term, I don't know. The next 3 weeks to 6 months, I don't know what the stock. I think it's going to be a difficult year. I think the stock could trade lower during that time. I think that this is not a distressed stock story. I think that this company, there's just so much emotion around people who are following this. I think stepping back from the emotion is there's the electrification, there's an autonomy piece that I think are very important. And I think that ultimately, with all of its flaws, I think that this is not a distressed company. They have this recent raise of cash, this $2.7 billion. That will get them an extra 2 years of runway at about a 300,000 annual run rate, which is essentially the revised estimates now. So this is not, distress means you're at risk of going out of business in the next year, and this is not at risk of going out of business.
Yeah, we're just looking at Tesla's free cash flow there. Craig, your perspective on the autonomous part of the equation. I was speaking to the Needham analyst yesterday who was talking about how some of the safety records on autonomy makes it unfathomable that we're going to get those robo-taxis in the next year or so. What is the autonomous equation from your perspective?
Right. I think you heard Jean talk about the concern of China. Another one that that I'll maybe throw out there that's also come into play and helped sort of fuel the selling has been this issue of another fatal crash in a Tesla involving autopilot, where the NTSB came out with a preliminary report last week. It was very similar to an incident a couple years ago in a Model S, where a semi-truck was crossing the road and the Tesla didn't pick up on it, and a person was killed. And so, Elon Musk has tried to sort of, take people's attention away from demand and the delivery issues that the company has been having, and talk about this future of robo-taxis. And he's really sort of undercut in terms of being able to make the case that we're on the verge of this robo-taxi future, when it's sort of a case of deja vu all over again of someone tragically dying in an incident involving autopilot.
Gene, very quickly, has Elon got to be more transparent?
No, I think he just needs to be more judicious about what he says and set better expectations at the core. And unlikely that we're going to get that anytime soon. So whatever he says, dial it back by 40%, and that's probably the right answer.